Hey, what's up, my friend? It's so good to have you once again, right? So, back to this week's market analysis, right? I'll be sharing with you, right, couple of trading setups that I'm looking at, right, which could, have a potential move higher, right? So, I'm actually in one of them, and another one I'm actually looking to get long, right? So, these two markets are definitely the highlight for the week. Okay, and towards the end of this video, I want to share with you a lesson, right? A lesson that I struggled with for quite a while, right? And this is actually none other than, scrutinizing your losses. I'm not sure if it happened to you before, but, whenever you have a losses, right, do you have the kind of thought that, hey, right, how could I have prevented that loss? How could I, have, mitigate the loss, right? So I want to explain to you that this is actually a self-sabotaging mindset, right? If you're trying to prevent every single loss, right, then you're really not going to make it as a trader. And I'll explain why towards the end of the video and what you can do about it. Okay, so all this and more in today's video. I'll see you there. Okay, so the first market that we are covering is the Treasury bond futures, right? So if you look at this chart, it is actually below the 200 period moving average, right? But that aside, right, I want you to pay attention to one thing, is that it is forming a potential base over here, right? A range, a base, whatever you call it, right? So if you study some of the blog post material I shared, right, I said that the market moves in cycle, right? I didn't came up with it, right? You have, traders before our time, like, Richard Wyckoff, who talks about this market schematics, right? Adam Grimes mentioned about it in his book as well, Mark Minervini. So nothing that I came up with, but basically the market moves in 4 stages. Stage 1 is the accumulation stage, right, which is something like this, right? It is in a range after a downtrend. Okay, stage 2, when it breaks out, right, it moves on into the advancing stage, right, which is basically an uptrend. Stage 3 is the declining stage, where the market moves into a range within an uptrend. And stage 4, when the market breaks down, is what I call the this is the distribution stage, right? Distribution, right? Basically a range within an uptrend, and if the market breaks out of the range, it goes into the declining stage. Okay, so these are, a general overview of the 4 stages of the market. So right now you're basically in the potential accumulation stage, which is this range over here. All right, so there are a couple of ways to trade this, right? The first and foremost, the easiest way, right, from a position trading, a trend following perspective, is you wait for the price to break and close above this high, and then you go long, right? That is pretty straightforward. So if the candle were to, just rally higher and then it closes up, you go long, right? Stop loss can be 1 ATR below this low. An alternate way to trade this, right, this is a little bit more advanced, if you want to call it, right? It basically involves the use of multiple time frame, right? You can go down to the 4-hour time frame. All right, and you notice this 4-hour time frame is basically a range within a range, right? Let me explain what that means, right? If you go up to the daily time frame, you notice that this is in a range, right, between the highs and lows, which I've marked out here, right? And within this range, you have another mini range that is forming up, right? Sometimes I call this a build up, right? Or you can call this a range, right, within a range. Then you can go down to the 4-hour time frame, and you notice that, there are obvious market structure that you can trade off. Notice this is an area of support, right? So it's possible, right, for this market to come down lower and then give us a valid entries trigger, like maybe a false break setup, a pin bar engulfing, etc. So it comes down lower, trigger below this cluster of stops, and then it closes higher over here. If that happens again, right, you can look to go long, right, and have your stops placed below this low, right? Give it some buffer somewhere here, right? So this is another possible setup that I'll be looking at on the Treasury bond futures. This is the 30-year one, okay? And if you look at it from a risk to reward standpoint, it is pretty darn attractive, right? Because if you just zoom out a little, right, you can see that the market could potentially retrace back towards this previous support turn resistance, or even all the way up back towards this highs over here. Okay, so this is where your trade management comes into play. How are you going to, trail your stop loss on this trade? Will you be looking to maybe, scale out a partial of your position, or you're going to try to ride the entire move higher, right? So this is something that, I can't cover in this video. There is just too much, options to think from, the pros and cons to each approach. So this is something you definitely have to really consider, not just your entries and exits. Okay. So one way, right, is you can use either the 20 or the 50 period moving average and use it, right, to trail your stop loss, right? So if as the market goes higher and it's still above the moving average, either the 20 or the 50, you can use them to trail your stop loss. So this is a a possible idea for you. So let me remove this. Okay, so this is for the 30-year bond. All right, moving on, another setup that I do like is the euro yen. Right, if you look at the euro yen, right, this market has basically broke out of this range as well. Then it broke out and retest over here. Again, right, what you can do is go down to the forward time frame and you observe that this market structure is very similar to the one that I shared with you on the 30-year Treasury bond. In fact, I am long this trade, right? I want to share with you. I'm long this one. So basically, where did I get long? Well, you can see that price came into this level, area of support. Then we have this very weak, feeble rally. You know what? Let me make this chart bigger, right? Okay, so you know what's the background story, right? Daily time frame, it's in an uptrend, right? On the forward time frame, you notice that there is this area of support, right? What is support? Support is just basically a potential area where you can expect buying pressure to come in. So what happened is that the market came all the way down into this area of support. Then we have, 4 candles of retracement, very weak retracement. If you look at it, right, the candle size is relatively small compared to this selling move over here. So this is telling you that, the sellers are still in control and it finally pushed price down towards the downside. So you can be sure that when price took out this low, there will be traders who are short this market because they are shorting the breakdown. All right. Then look what happened next. Within 2 or 3 candles, price rallied all the way back up. Okay. So now, what's this called? Well, you can call this maybe a hook pattern or I don't know, a fishing hook pattern or whatever you call it. But I just simply call this a false break, where price did a false breakout of this low and then it closed higher. So right now at this point in time, there is a group of traders which are trapped. They are in the red. And who are they? They are the traders who went short on this breakdown. Correct? Right? If you're short and the market goes higher, you are trapped, right? You're in the red. So where would they likely put their stop loss? If you ask me, right, they could put it somewhere above this highs, here, or maybe even here for those extremely conservative traders who are short, right? And using this knowledge, I go long, right, to profit from this group of trapped traders. On top of that, right, you saw the daily time frame earlier. I'm trading with the trend. Okay, so I went long when price basically, trade above this highs over here. I remember the exact level is 123.5. Okay, I had a buy limit order. My stop loss is again 1 ATR below this low, right, somewhere here. So I will see how this goes, right, how this trade would run out, right. I could be wrong, right. I mean, there's no guarantee this will be a winning trade, but this is my thought process behind this trade setup. And if you look at the daily time frame, you are in line with the uptrend. So it's a trade that is worth, riding for the long term, right? So again, I can't say how you're going to manage your trade, right? Some traders may just choose to take a swing in this trade and just exit somewhere near these highs. That is fine as well. There will be traders who are, trend followers looking to ride the entire move to see if you can break out above these highs and, to ride the trend. So this are, I would say, different trade management strategies for you to, really think about. Okay, so for a trend following perspective, needless to say, right, you'll be trying to ride the trend. Okay, so this is for Euro Yen, another market. And last but not least, let's talk about the pound dollar. Alright, so since this is the market that has been in focus in recent days, right, since the pound election. So first and foremost, just let me share with you a trade that I took and I got stopped out. Okay, so basically, right, the pound dollar, again, this is a very similar setup to the 30-year Treasury bond I shared earlier. A downtrend, then you have this potential accumulation stage over here. The market rallied higher, pull back a little bit, and then it closed over here on this candle. So I went long. Alright, my stop loss is 1 ATR below this low. So I went long on the break of this highs over here. And as you can see, the market then, went a little bit in my favor. Alright, a little bit in my favor. Retrace a very weak rally before it collapsed, right, on Friday. And it stopped me out for a loss. Okay, so I got stopped out of this pound trade for a loss. So I guess the point I'm trying to bring across is that, as a trader, you will have winning trades, right? Even though this setup may look very similar to the 30-year Treasury bond, hey, who knows? The 30-year Treasury bond could be a winner, and this is a loser, right? So the point is that, you know, there is really no point. I would say a mistake that I see a lot of traders make is that they have a loss, and then they scrutinize the loss. Every single loss they scrutinize, and they ask themselves, why is this a loss? So they'll pull out all sorts of funny logic and indicators and explain why this is a loss. Maybe they look at the indicator and they say, oh, I had the loss, right? This isn't a good idea to long, maybe because it's a Friday, right? The markets are, you know, closing in a few hours. I shouldn't have gone long here. Or maybe, you know, hey, the RSI is overbought. I shouldn't have gone long here. Or maybe, hey, I didn't bathe today, right? I shouldn't have gone long because I didn't bathe today. So can you see the reason for this? If you were to scrutinize every loss that you have, right, you're going to come up with many filters, right? Like, for example, didn't bathe, one filter. Second one, maybe RSI is oversold, right? Second filter. Third one, maybe it's a Friday, right? I came up with 3, right? Fourth one, maybe it's a price is, I don't know, maybe the candlestick is too small. Or whatever reason. So you come up with all these fancy, funny, little looking illogical filters. And then if you think about this, right? When there is a potential setup that comes up in future, what are you going to do? Well, logically, if you have all these filters that you define why you had your losses, you have to, you know, use all these filters to make sure that the trade meets your requirements. So you have to check, okay, did I bathe today? Is the RSI oversold? Is it Friday? Is the candle too small? If it is, then I won't take the trade. So can you see that, you know, if you were to scrutinize your trade, right, so microly, right, you have so many filters that to a point that in future, whenever you take on a trade, there will be no more trades left because you have way too many filters. Are you with me? So the point I'm trying to bring across is this, is that when you have a loss, sometimes that's just the cost of doing business. There is nothing wrong with your rules or your plan. It's just the cost of doing business. So be careful of going down this rabbit hole of, you know, scrutinizing every loss and coming up with all sorts of funny, funky reasons on why you had the loss. Because sometimes it's just a loss and it's just the cost of doing business. Right? Trust me, I have been down this path before. I know what you're feeling, and I don't want you to, you know, to go down this road that I've been through. Right? So be aware of this very serious mistake, right? Losers are fine, right? If you want to review your losers as a group, right, as a larger sample size, it's fine. Maybe you can find certain patterns that lead to your losses. But I'm not scrutinizing every single one of your loss that you had. That doesn't make sense. Okay? So yeah, I guess I'll end it off with this message for today's video. Okay, so just a quick recap to what we have covered this video, right? Number one, I talk about the 30-year, right? I'm bullish on this, looking for a potential long setup. Number two, we also mentioned about the Euro Yen. I'm bullish on this as well. And number three, right, we talk about this market, the pound dollar, on why you should stop, right, scrutinizing. I can't write the word here. Your loss, right? Your losses. Stop scrutinizing every single one of your losses, because, you know, it really does not make sense. Okay, so with that, right, I hope you have enjoyed today's video. If you do, right, please hit the subscribe button and the like button. I would really appreciate it, right? It's a great feedback for me to know, you know, what kind of content you're enjoying. And also, if you want to learn more, I believe at the top right-hand corner here, where you can see the Superman logo, right, you can click on that link, right, and you can learn more about my own trading strategy and methodology, right? You can download the free trading guide somewhere at the top right-hand corner with the Superman logo. Okay, so with that, right, I wish you a fantastic, great ahead. Be safe, be well, and talk to you soon, my friend.